Eric Mwade for the week of August 19th, 2013. Let's take a look at pre-market here, pretty much across the board. I would say the market is pretty much unchanged. We have about 2.5 hours before the market opens. I know it's very early, but this is how it's shaping out. Pretty much according to Europe trading, it looks like slightly down. Asia was mixed. Let's take a look at it. Commodities here. Looks like everything is just pretty much unchanged for oil. Gold is slightly up, but about 0.27%. Silver slightly down. So pretty much starting the week unchanged. Let's take a look at the Nasdaq weekly. We can see here that the Nasdaq has not broken down below its most recent weekly buy point. So the Nasdaq still continues being healthy. It continues to stay above the 10-week moving average. So that's a healthy pullback as of right now. Of course, the thing that we have to keep in mind is that the Nasdaq made 13-year highs, but yet the weekly did not follow through on the MACD on that setting there. So there was some kind of negative divergence there. We'll see what happens, but this pullback has not broken down yet, so there's really no need to to completely believe the market has to come down. The pullback has not necessarily broken down. Now the Dow's story is slightly different. You'll see that the Dow on the weekly broke down below 15,354. This weekly closing high was the buy point, so we are now back below that, back below the 10-week moving average. And this is how a pullback is going to begin, or even what's it called, like a correction, or maybe even a bear market, who knows. But also notice that we made lower lows on the RSI on the weekly while the market was making higher highs. That negative divergence can set up for a down market down the road. On the RSI, we see we are coming to this potential support level here. So that could be an area where the market could find support as far as the Dow is concerned. The Dow daily is below this buy point here on a daily closing high. The market was trying to hold above 15,409. Once it broke out there, came here, tested it, moved higher, settled down here for a couple of days, and then broke down below the 50-day moving average. But now we come to this potential support area here. Draw a straight line on those 3 points, and you see the market ended last week right there on that line. So are we going to bounce and recapture the 50, or are we going to stall? And then the talk is going to begin that the market could be pushing to test the 200-day moving average. So that's the scenario. We are exactly sitting on the fence here. We'll see which side the market decides to go. As far as the RSI is concerned, notice also we made lower lows in technicals here when the market was making higher highs, and we pointed out that could be a reason for a pullback. And yes, indeed, it's become a reason why the market has pulled back. The market is very close to this 30.9 level 0 on a daily basis. Watch that, because if the market does slash below 30.90, that's going to be good for a decent down day. So watch for that. The market trading at 31.84 on the daily RSI. If you take a look at the transports weekly, now they were the first to break down below their buy points about 2 weeks ago, moved below 65.49, this closing high. So there was a breakout here, failure, recaptured the breakout, and now we've spent 2 weeks below this level here. So 2 weeks below that level, also 2 weeks below the 10-week, or at least 1 week below the 10-week moving average. So we are starting to see that the market is getting comfortable with a bearish looking weekly chart on the Dow Transports. Also notice that there was a negative divergence here as the market continued moving higher each time. So not surprising, we are pulling back on the RSI on the weekly. We see that there's a potential support line that has held going back many years. So this could be where you expect that blue lower line to find support or failure. On the MACDs, they don't look very good, because you notice that, of course, we have this negative divergence. We have negative divergence, and we seem to be about to break this level here. So that could push the Dow Transports even lower. On the daily for the Dow Transports, you see that different scenario now. The transport on the daily are holding firm or trying to hold the 50-day moving average. Surprisingly, that shows up support here on the 50. So we'll see whether it's going to find support here or fail. On the daily RSI, you see that this line here, pink line here, has been RSI support for a while, and we bounced off that level on Friday. So we'll see whether that is as low as this market goes, because the RSI suggests if that's support there, then maybe we start moving higher. If we crack below that support line, then maybe the market could see another leg down. So we have potential support here, or we could stall below that line and we start threatening to move lower and break this 50-day moving average. The S&P 500 weekly. Again, let's just begin with the fact that now we are back below 1667, which was this weekly closing high, which was a breakout level. So we are back below that, back below the 10-week moving average. Negative divergence on the RSI on the weekly began this recent slide, but now we see potential support on these low lines on the RSI. So that could be an area. This brown line here could find support, help S&P 500 find support here, or if we break down there, then that continues pushing the market lower. And you also see that on the MACDs, we could break this level here, moving very close to zero. It seemed to me that there was head and shoulders formation on the weekly MACDs for the S&P 500, but right now it's trying to hold that support level on the RSI, so I'll default to that for now until it breaks. The IYR daily was probably one of those, the only market that, to me, this was actually the best performing sector in the market in 2012. The home builders, real estate complex, best performing 2012, had a decent beginning of 2013 as they pushed higher. But since then, since this highs here on the IYR of 75, you see that as of Friday, we had the lowest close for 2013. So this market is really breaking down. Failed to hold support here at the 50-day moving average here. And as you can see, since then, it's failed to hold the 200-day moving average also. We have a bearish crossover between the 50-day moving average and the 200-day moving average. Another red signal. Also notice we were down significantly over the last couple of days because we broke this RSI trend and we moved below 30.90 on the daily time frame. So that's a market that could be telling us the other market slowly could be moving to that type of market where markets are pulling back and failing to hold the 50. The XHB on a weekly chart shows that we are now trying to move below or out of this nice bullish wedge since 2011. This has held, and we seem to be just about to break this 2-year trend. We are out of that channel there. So, we're also trading below the 10-week moving average, trying to find support at the 33-week moving average. Who knows what happens. There could be support here on the weekly, on the RSI, yet we see that there are early signs of a break. So if it can't hold this week and continue sliding, then this is going to confirm a break. And the fact that it just means that this accelerated move to the upside here on a weekly basis has stopped, and now we might either form a base here or even continue pushing lower. Now let's spend a minute here and take a look at gold. anybody who wanted to go and stay long gold should at least take, some kind of confidence from the fact that gold held broke out above, not really a breakout, but it's a short-term trend break. When it moved above 1348, which is this daily closing high, gold is now trading above the 50-day moving average for the first time in, I'll call it a couple of years, actually, maybe 1.5 years. So the level to watch is 1348. If gold can continue staying above 1348, that's a nice short-term trend break and a breakout. That's good. I see trouble here. This dotted line on the RSI could stall gold. If it stalls here, that's an early sign of weakness. But for now, 1348 is a level to watch on gold. If it moves back below that level, then maybe this move has run out of steam. On the weekly, this is the first time gold really has moved above the 10-week moving average going back. Let's call it, there was a failed attempt here in late last year, but gold hasn't traded above the 10-week moving average until, let's go back to about 1 year ago. So it's been 1 year when gold was above the 10-week moving average. And that's a sign of an instrument that wants to recover. We'll see what happens. But when I take a look at the RSI, I see signs that this is where the break took place on the weekly, which corresponds to this early 2013 break there. So that's a serious break. Now we see that this red line, the break took place there, and now this red line is being back tested. So if gold fails to hold this level here, that's a sign to sell, because that back test of this line here, which was a break point, is now becoming back test. If it fails, you might want to consider at least being negative short term as far as gold's prospects are concerned. Let's take a look at one more commodity, and it is for the WTIC, or the crude oil market. And just watch crude oil, because if crude oil can break out above 108.16, that's a fresh breakout on a weekly basis. So watch crude oil if it moves above 108.16, which is the highest weekly close going back to the beginning of 2012 actually. So if it breaks out above 108.16, that's a fresh breakout. You want to have some exposure in the energy and in the oil and gas, and just basically commodities in general. So these are the levels to watch for the new week. Eric Muathe, good luck, peace, and blessings. Woo!